had a slew of data coming up from the sector this morning. That's from the likes of Anglo American, Amplats and Sibanye. Peter Major, Cadiz Corporate Securities joins us in Cape Town. Peter, let's start with the Anglo American stable now and start with iron ore. What happened there?
Well, look, Anglo's mixed bag. Half their commodities went up in production this quarter and the other half went down. So iron ore, it went up, funny enough, on the production side, but it fell on the sales side. So how do you rate that, Lindsay? Copper production, they claimed, was down because of lower grades. Diamond production was up because of a rich section in Zhuaneng. Metallurgical coal production was up a bit, but steam coal was down a bit. So all in all, when you saw Anglo's fall 3% today, you started wondering, is that because you had a mixed bag in production, or is it just strong rand, or is it weak commodity prices? Who really knows, Lindsay?
Peter, staying with that production report, and of course we're reminded of that 15% return on capital target that's been set. With this in mind, do you think that the future looks bright for the shareholders of this particular stock? Because it certainly seems like the leadership is going to be letting go of any assets that are going to keep them from meeting that target.
Look, it's a tough call, Nosy. This share is probably trading at the lowest it's ever traded to the all-share index in 100 years. I don't know. I didn't have a graph that went back far enough, but it's as low as it's ever been to the all-share on my graph that goes back 20-some years. So you say, have they got the right CEO? Yes, I think they do. Have they got the right commodity mix? Yes, I think they do. They got a balance sheet that looks a bit like South Africa now, though. They've got a heck of a lot of debt there, so they've got to pray that commodity prices don't fall any lower. Just like South Africa is praying commodity prices don't fall any lower. They've got to increase production, because if commodities stay flat or go lower, your only salvation is to increase production, and they're trying to do that. But, you know, again, it's a mixed bag, but that's an advantage of Anglo's. At least they have 6 very different commodities, and they've got mines scattered with those commodities. So they do have production increases coming forward that will help them in flat to down commodity prices. I think it is worth buying here. It really looks low. It is discounting an average future, but on the mining side, I'd take maybe Billiton first and Anglo second.
Peter, you know, with the focus on iron ore and that being such a big part of Anglo's earnings over the past couple of years, and what we've seen going on now with the commodity price, you know, what's your view there? What's your expectation about the commodity price? It's actually come down quite significantly at a much faster rate than I actually anticipated.
Look, it didn't come down fast enough compared to what I anticipated, Mia. Okay. And I do worry it could come down more. I do worry that copper can come down from $3 to maybe $2.70, $2.80. You know, its long-term average is $2.30. And I'm worried about iron ore. It's bounced back to 85, but its long-term average is 68. The only thing going to keep it above those averages is strong world growth. The U.S. is doing good. China's actually holding up pretty well. So it's really a 50-50 bet here. Usually I've got a stronger view, but right now, you could be right. If this iron ore price comes off a bit more, Anglo's does have production increases, though, coming through in South America. And that will be low cost compared to a lot of the production out there. But it's a 50-50. It's not an easy call, even buying Anglo's at today's price.
Peter, what is really the future of the mining industry in South Africa, or say over the next 10 years? Because we've seen all the companies trying to do something. Recently we saw Anglo Gold Ashanti trying to restructure their balance sheet. There was a little bit of talk with obviously Amplats saying that, you know, or Anglo American, if the right partner comes, will talk and so on. What do you think the future is and the implication that could mean for South Africa?
The future is very gray, Joseph. It's not bright. The mining companies have so much against them here, and you can just go down the list. You know, they've got massive layers of legislation that isn't even finalized yet, that it doesn't even get defined correctly. You know, a lot of people have different definitions of BE. They have a lot of different definitions of, do you qualify for your EMP, safety. They got weak commodity prices forecast rather than strong and growing commodity prices. They're not even sure they're going to get electricity. If they do get it, it's going to be at a 15-20% increase. They've got very militant unions, and you got two big unions fighting each other. They've really got a lot against them. The future is not bright here under current circumstances. And if there's not an Indaba with all the players involved, and if the Indaba doesn't have all the players shaking hands and agreeing how much they've done wrong the last few years and how they're going to correct it, then the future can't get better for mining here. It's tough, and it's only going to get tougher.
Peter, I was talking to a stockbroker today and he was bemoaning the fact that Impala Platinum went to 78 rand 39, and he said the last time it was here was 2005. So you talk about the next 10 years, we've lost a decade. Shareholders have lost a decade in this particular stock and so many other South African stocks. As I said earlier on, we're getting it wrong.
Shareholders have lost 50 billion rand in the platinum sector alone this decade. So yeah, it's a real lost decade for everybody, but shareholders the most. And when shareholders have lost 50 billion, they're pretty reluctant to put another cent into a sector that shows no promise and no care if those shareholders get a return. I don't hear anybody saying the shareholders deserve something. And so it's not a bright future, certainly not on the platinum side and not on the gold. These mines are all carrying a lot of debt. The banks are reluctant to loan them money, and shareholders are up to here.
Peter, let's stay on gold since you brought it up now. If we look at the gold price, we've seen a tumble of almost 27% since the beginning of last year. Now, Neil Funneman has quoted recently saying that the sector is ripe for consolidation, and perhaps regional consolidation might be a feasible way to go, where certain cost savings could be realized from working from a regional hub and that kind of sentiment. How do you respond to that? Does that make sense to you? Do you see this happening?
Yes, it does make sense. I do see it happening, but it's not great news. When a sector is ripe for consolidation, it means much of the sector is battling, going out of business and losing money. You know, I would like to hear a sector is ripe for expansion. A sector is ripe for new players. But unfortunately, Neil is right. This sector is ripe for consolidation because just about everybody is bleeding cash. Neil is about the only mining company, Neil Funneman Incorporated / Sibanye. He's the only guy generating cash. So yeah, there's going to be more fatalities, more wounded carrying out on stretchers. That is going to translate to consolidation. But consolidation means the industry gets smaller, but it's down in survival mode. It's not growth mode, it's survival mode. And that's not a great future for the country.
Fatalities and more wounded carried out on stretchers. That is the view from Peter Major, Cadiz Corporate Securities. That's what he's been representing this evening, giving us some insight into the mining matters of the